Ladies and gentlemen, good afternoon. Ladies and gentlemen, the subject that we're talking about is digital currency, transformation as seen after demonetization. And we've got a nice panel of speakers, and I'd like to welcome them on the stage one by one. The chair is Mr. Vivek Singh, Head Payments, Product Innovation, Airtel Payments Bank. Vivek, please join us. Thank you. Vivek is going to speak the most. We've already agreed. I'd like to invite Ankur Malhotra, Director Mazars, on the stage, please. And we'll tell you what he's going to do in the next few minutes. Mr. Kamaljeet Rastogi, who's supposed to be here, Global Head of Business Development, Mahindra. You're here. Come. Hi. Welcome. Ladies and gentlemen, give him a warm welcome. And then we've got Mr. Anuj Sharma, Technical Supervisor of Sunshine Digitronics Private Limited. Hello, Anuj. Welcome. Thank you. We've got Praveen, Dhabhai, COO of Sugal and Damani Utility Services Private Limited. Praveen, welcome. Ladies and gentlemen, just a couple of points that I'd like to mention, and they may or may not have relevance to this particular session this afternoon, but certainly I think that these are areas which I may talk about, may not be practical, but I'm of a firm opinion and belief that if we are in a position to go digital as far as payments are concerned, then I think our telcos will play a prime role in this transition. And the reason why I say that is twofold. One is reach, or threefold: reach, connectivity, and the ability to be able to undertake digital transfer using mobile services and mobile handsets. That is one. The second is that the brick and mortar component of traditional banking is expensive. We've had examples of indiscretions, which that system also lends itself to. Not that the digital system cannot be overridden, it can. So one has to worry about safety, security. Importantly, each transaction that is undertaken in the digital world is recorded. So it can't be offline. Whereas cash transactions are prone to non-tax and tax evasion, which in this system of the digital world is almost impossible to operate as. Now let's get heretic. Today we all pay taxes on every commodity which we purchase. We pay taxes on our income, whether it's corporate or whether it is individual taxes. But supposing somebody one fine day said no corporate tax and no income tax. Wow. Can we think about that? And institute a simple system known as a transaction tax. Now, for transaction tax to be possible to implement means that a whole host of people have to get involved in that element of digital money transfer. And your transaction tax is equitable. Everybody pays. You pay according to the transaction. It is estimated by people better than me, qualified than me, and I am not in this business myself, that a small transaction tax would probably bring more money into the coffers of the treasury than the standard system of corporate and income tax. It is also estimated that the entire paraphernalia of the income tax department, and somebody gave me a figure of 150,000 people in this country, would not be necessary. Now, I may be being heretic in this, thinking that possibly this is something that one can look to in the future. But certainly we would not be involved with PNBs and SBIs and others who in any case have NPAs which are more than the than their equity, and are actually being propped up again with public money. It's not government money, it's public funds. So these are some observations that I have, which I may be incorrect in completely. But I think that these are very important areas that one can look at. Maybe 20 years hence, as a society, we might reach the stage where you only have a transaction tax. So you pay when you receive, and you pay others. The receiver pays, not the buyer. Or maybe you can even do a buyer and a payer, a buyer and a receiver paying. I don't know. So elements to think about. But I think that the telcos are the ones who can really take this forward. And I wish they would start a lobby, which can only be in the interest of the entire economy. And a strong lobby. I don't mean just a political lobby. I think it needs a very strong lobby to be able to achieve something like this. Having said that, one more task that I want to undertake right now. We worked very closely with Mazars, and we asked Mazars to do a knowledge paper for us. And we have copies of that knowledge paper, and I'm going to request that this knowledge paper be released right now. Mr. Malhotra, you are the author of this knowledge paper. Perhaps you might like to be the first one to release the paper. If we have a photographer, if he's available here. Do we have a photographer? We might want to start with that, and I'd like to join that photograph as well. I'm going to leave the chair of the session to continue to take over. Vivek, the honors are with you, and you might like to request Ankur to talk or not talk. That's your prerogative. Thank you.
Good afternoon, everyone. I am Vivek. I would like to thank Mr. Prem Bahal for the fantastic introduction about us as well as the topic. He has touched almost all the pillars required to be touched in a fintech and this demonetization in the industry after demonetization. So, as the topic suggests, the impact of demonetization, I would like to start with some facts and figures. What was demonetization actually, and what was the actual impact, and then what was the immediate implications on some sectors, and what is the status now. So, okay. So, as we all know that our Honorable Prime Minister Modi announced the demonetization of 1,000 and 500 rupee note on 8th of November, which actually meant 86% of the currency in market was gonna scrap. And then the new notes were to be introduced. Then the industry was left with only 14% of circulating cash. Okay, so, so there were some immediate implications of this step, and one of the biggest industry which got impacted was e-commerce. So with more than 50% of their cash on delivery business were declined from day one, and it took many months for them to recover that lag. Even though the digital transactions were grooming, but e-commerce industry was not prepared to have that kind of setup for the delivery line and channels. So that was one of the big industry which got a huge impact of this demonetization. So I will just talk about 2-3 things which were the core agenda of this demonetization. One was told that it was meant to combat tax evasion, as Mr. Bahel said, and then it was to drive electronification of transactions whenever a payment is done, be it a merchant payment or a send money, and then prevent circulation of the counterfeit money. So on this, there is a recent report from RBI which has come out, and it talks about what exactly has happened after demonetization on the currency status of the country. So there was 17.97 lakh of crore of currencies in circulation, okay, and out of which 15.4 lakh crore notes were actually scrapped, and it was expected that there will be 3 to 5 lakh crore of currency which will not come back to RBI, and it will be kind of a black money which RBI can knock off and write off from the books. But when the report came from RBI, it actually talked about that out of this 15.4 lakh, 15.28 lakh crore came back to RBI, and RBI in turn has to issue new notes against this 15.28. So essentially, which meant only 8,900 crore did not came back, and which can be seen as a counterfeit currency or other modes which we can classify under the apart from the normal channels. But the cost to print those notes was also so high that you can't really say that this impact was so good on the currency side of it. So the currency in circulation came back. So the recent last month report also says that within a year the cash in circulation has reached back the earlier stage, and almost close to 17 lakh crore is again in market and all. But the other side of and the good part of it is, irrespective of this currency fiasco, the digital transactions have actually gone up, and the immediate impact were, so I will share some stats with you. So if I talk about the merchant POS transactions, so there was a 450% jump in the number of transactions which were happening digitally in the country, and then the wallets were also there, but the predominant mode available with the country was debit cards, because there were 725 million debit cards at that point in time, and then 25 million credit cards. So the transaction happening over cards grew by 450%. And merchant category, so if I talk categorically, the fuel as a category got 800% increment. So people who were purchasing fuel, which was kind of a basic necessity for everyone to commute, those transactions grew by 800% immediately within 5 weeks of this demonetization, because people started using their debit cards. And when I say this increase in transaction, I'm specifically talking about purchase transaction, because in India, predominantly our debit card industry is dominated by ATM withdrawals. There are very few purchases happening on debit cards. So out of the 700 million, only 50 million debit cards do a transaction over a merchant. But after this, this also went up and it reached 100 plus million immediately within 5 weeks. So these are some of the stats, and if I want to talk about little bit on the basic consumer need for a payment. So when you say I want to make a payment, either I would like to send money to someone, or I would like to purchase a good or service. So on one side there is definitely a consumer, on other side there can be a consumer or there can be a merchant. So our industry was not friendly to merchants in a way, like the way Mr. Bahel said. The other side party, if it is a merchant, he has to pay something for that particular transaction. And if you see recently, government has come out with the MDR, which is called merchant debit rate, to be discounted by for lower ticket size transactions. And the stats for that, I am not sure how many of you would have seen Bheem or UPI, but UPI was one of the key product which earlier everyone needs to know other side parties, IFSC code, account number and all. And for merchant also, they need to have some card and a swiping machine. But with Bhim and things coming into play, only the mobile number is sufficient to make a payment. And the transaction volume of this UPI has gone to 171 million in Feb, with 19,100 crore of value of transaction being done just by the protocol of saying I am sending to a mobile number. And that is a huge gain. This is just not because of the technologies and the protocols being introduced. It is because government is also supporting digital payments by subsidizing merchants with the lower ticket size volumes. So these are some of the good initiatives across the industry. Because if you see consumer electronics, other industries, though have been revolutionized a decade back, but financial technology as well as banking is still running on old rails. And the overall infrastructure has to be somehow revamped. And with new age companies, wallets and all coming into, they are not riding on the traditional chains, they are building the new technologies which are required for this sector to innovate. So these are some of the things, and I would like to conclude my arguments with a small note. So demonetization has opened many inroads in the digital payment ecosystem in India. People are now becoming less apprehensive of technology and are now becoming comfortable with digital world with very passing day. The software industry has been given a boost. The e-commerce industry did suffer in the beginning, but has now tremendous scope of growth. There are certain security aspects to this, which every industry has, and this industry is also working with. I'm sure there will be many massive improvements in coming few years to help demonetization and making Digital India a success. With this, I would like to call Mr. Anuj to continue the conversation. Thanks.
Hi, very good afternoon, everyone. I'm Anuj Sharma from Euro Digital. It's quite saddening that our CEO, Mr. Dinesh Agarwal, is unable to attend this session due to some business requirement. However, Sunshine Digitronics is in the favor of cashless India. Therefore, we insist and motivate to all our customers to use all the possible e-transaction methods. I believe India has been in the digital fold for a few years now. However, for digitalization, for grow and includes all the session of peoples in all areas of the country. There is need more values added services, better internet connectivity, regulatory support and market education. In the end, I would like to thank you 26 Convergence to conduct such an important and intellectual session. Thank you all. Thank you. And I would like to request Mr. Kamaljeet Rastogi to forward this session.
Thank you. My name is Kamaljeet Rastogi. I work for a company called Mahindra Comviva. We are part of Tech Mahindra, which is part of the Mahindra Group. Mahindra Comviva, a lot of you may not know, we are a software product company, and we are a world leader in providing mobile payment solutions to, I would say, our software is running about 45 countries. And as per the global statistics, about 20% market share in mobile payment is being run on our software. To start with, I just want to do a quick show of hands from all of you. How many of you have used a mobile wallet in the last 24 hours? Great, great. Okay. So I think, you know, the statistics that you shared are being shown, and obviously it's quite a young crowd here, informed crowd. So a lot of, you know, the convergence or the transformation has already happened here. But let me tell you that India is one of the highest cash to GDP ratio country in the world. Cash represents 12% of the GDP of India. It's one of the highest, right? So even with all the demonetization and all the things that have happened over the last 2 years, we are still very cash heavy, and cash has come back into the system. There are a lot of reasons. I think we are the converted, but there are a lot of people out there who still love cash. So there's still a long way to go. At the same time, if you see globally, there's a research done by World Bank, which is comparing the countries in their transformation towards digitization. At the same time, how far they have already reached. So India is very high in terms of the speed of digitization. But in terms of actual using digital currency and digitization, we are still low compared to, let's say, Singapore or Hong Kong. Even we are lower than Indonesia as of today in digitization, right? So there's a long way to go. Also, GSMA, the industry body for telecom operators, which does a lot of research on mobile payments, published a report about a year back, which showed that there are 500 million mobile money accounts as of a year back, and must have grown by at least 10% as of now. So 500 million accounts. In some countries, the number of mobile money accounts, and I'm talking mainly run by the telecom operators, is much more than the number of bank accounts in that country, right? So financial inclusion has happened through this. Cost of transaction has come down, and transparency plus taxation, everything has improved. In fact, there's a country in Africa where 50% of the GDP of the country is being processed through mobile payments, right? It's completely gone cashless. There are a lot of other reasons why they went cashless. But what this statistic is proving is that mobile payments, the use case, the technology, the safety is actually good enough to capture that much part of the GDP. I mean, for a country to become totally cashless. A lot of us believe that, hey, yes, digital payments will become 10%, 20%, cash will still remain. But there is an example in the world where cash has been completely wiped out. So theoretically and even realistically, it is possible, okay? Now, telecom operators have been typically the leaders in this space. So globally, if you see Africa, you must have heard the case study of M-Pesa. A lot of the students here I can see, youngsters, they were the initial pioneers in Kenya, M-Pesa. 75% of the people of Kenya are using M-Pesa, right? China is a very good example. I've been told that the street hawkers in China are refusing to take cash, right? Because they all have a QR code, Alibaba and WeChat Pay, and there are many modes of payment. So you can't pay in China if you are not having a wallet. And it is there in cities, villages, hawkers, stores, everywhere. So, just to share some statistics that there's still a long way to go. Yes, in India, there has been a lot of development, NPCI, UPI, BHIM, demonetization, and it is capturing a lot of the global attention. Any conference that we go to in mobile payments, anywhere in the world, there is a session on India, the data shared by foreigners, not by us. Foreigners are talking about Aadhaar, they are talking about BHIM, NPCI, they are very aware. So in terms of infrastructure, we are very developed. But in terms of actually adopting the payments, and banks have actually lagged behind. So that's why RBI issued a payment bank license. So unlike Africa, where the restrictions were not that strong on the telecom operators, they launched mobile payments, cash out was allowed and all. So mobile payments took off. But in India, the prepaid instrument license was not that flexible, so mobile payment did not take off. That's why RBI has issued the payment bank license to Airtel, and I'm sure you will become the WeChat Pay of India, and a lot of work is going on. But banks have lagged behind in India, the mainstream banks. Though each one of them have a wallet, ICICI has, HDFC, Axis bought free charge. But they have not been able to achieve their goals of achieving financial inclusion or giving a wallet to millions of us, right? So again, how many of you use a bank wallet? Okay, great. This is another example that banks have not been able to penetrate, though it is there. It was their actually home ground to say. But they are trying to catch up. Every bank is trying to launch their wallet. But somehow banks, the thinking has to change, the design of the banking systems have to change to really achieve that kind of scale that, that is required in mobile payments. So I think with that, I will hand over to the Praveen. Yeah.
Yeah, my name is Praveen Dhabhai. We have a digital wallet license. The name of the brand is Payworld Money. We have implemented the wallet in a little different way. Our focus is more on assisted mode of transactions rather than people doing transactions directly. For that, we have almost 100,000 retailers across India, especially in smaller cities and villages, where the people come to them and they do the digital transactions on their behalf. Because what we have seen it, and otherwise also in various reports it has come out that almost only 4% of the people in India have done payment transactions directly. Otherwise, it is all assisted. And those are the people, they need digitization or they need mobile wallets to be used for doing the transactions. So, having said that, after November 2017, we also did, a lot of surge was there in the transactions, but ultimately it came back to the normal levels, what it was earlier prior to November 2017. So, but at the present situation, currently after 1st of March with the new directive which RBI has come out, the wallet transactions have gone down almost 80% for all the players. It has come to 20% because RBI has put a rule that for, see, wallets being made, the technology of the wallets were developed keeping in mind the convenience of the consumers. So it was very convenient. You download the app or the wallet will be created. You put the money either through cash or through bank account. So, and the transactions were always small ticket size. Now with these new guidelines, and almost 90% transactions were remittance transactions for all wallet players. When I say remittance, it is either to the bank account or from wallet to wallet. So now with the new rule coming, eKYC has become mandatory, or KYC has become mandatory to do any bank transaction, remittance transactions. And there are now two types of wallets are there. One is minimum KYC, which is the limit is 10,000 rupees. Another one is 1 lakh rupees, and where the KYC is mandatory. And for the minimum KYC also, domestic money remittance is not allowed, and then you have to, it's not become seamless. So you might have used, might have faced a lot of problems while using any wallet from since 1st of March. So, so our this thing is there that with November Notebandi and everything, of course the digital wallet transactions increase, but ultimately with these new norms coming, everyone will go back again to the cash, because small ticket size you don't want to do it through your bank wallets or bank account or net banking or UPI, especially for the people whom Payworld Money is targeting, like taxi driver, migrant laborers, people who don't know, they might be having a smartphone, the penetration is very good, they have a data thanks to Geo, but they don't know how to do the transactions. So for focusing on that with this eKYC norm, the remittance business is coming down drastically, and we have discussed with the colleagues, it is almost 80% down. So I think that is what something needs to be done on that. So I would like to, Ankur to.
Right, so I kind of second to the thoughts which all of you have said, and largely that's the same which we have covered in our report as well. So just to give you a background, we work for a firm called Mazars, which is a tax consulting and audit organization. We also advise people on market entry strategy, market assessment, and so on. On the same lines, we have made this report, which kind of seconds the thought of what all of you have actually shared, talking about, let's say, how it all picked up from demonetization, and maybe after that, once all the cash has come down in the market, so it has fallen back. But of course, from that peak, it has come down. But I believe eventually it will again go up, and as we adopt more and more towards digital currency. So that's it.
So I guess, hello. Hello. Yeah. So I guess everyone has shared his thought. I will just summarize what everyone has thought in a flow. Like everyone is of the opinion that the post-demonetization, the immediate impact was quite good in digital transactions, and the government support in all fronts was also to an extent to somehow boost the wallet industry somehow. And in between, like not in between, just before this demonetization, the payments bank were all license were already issued, and the launch happened of many of the banks, with the Airtel Payments Bank being the first to launch it after demonetization. And somehow as Mr. Praveen rightly said, somehow the indication from the government is towards having a KYC based digital transactions rather than booming the existing wallet industry, which is already reached to almost every mobile has a bundled wallet in itself. So, but the recent circulars and the guidelines have already stopped it, and not stopped, but bifurcated it between payments versus a remittance. So now regulator as well as government is seeing that they need to somewhere demark the lines between digitization for remittance and digitization for payments. So they want to call out loud that they are good with digitizing payments, but they are not too good with digitizing remittance. So, which essentially means, and the core agenda for them is to combat the terrorism activities and all, so that they should not be. Digitization should not become a alternate channel for those set of activities when it comes to sending money to someone. But definitely, on the contrary, they want every individual small size payments happening in the country to be done through either mobile wallets, even without no KYC, or through payments bank with a small ticket size bank account. So just to make everyone aware that payments bank license allows a payments bank to open a bank account of an individual with a 1 lakh rupee limit at daily 1 lakh rupee. So you cannot have a 1 lakh rupee balance at the end of the day. Rest all is equivalent to any scheduled commercial bank in the countries like SDFCs and ICICIs of the world. So this is how it is, and I'm sure you people would have seen the new QR avatar, which is called Bharat QR. Earlier there were closed loop QRs being deployed in the country. Predominantly we see Paytm QRs, and then came the FreeCharge and the MobiQuick's QR. But later the government came with a guideline of a combined QR for all. That guideline does not imply on wallets per se, but for the banks, and every bank has to only place this unified QR in the market, so that every customer of any bank coming to that particular merchant can make a payment. So this is how, like, the way ahead should be, that payment should be digitized definitely in one format or the other, but remittance has to take a safer route. I would like to say this is all we have to say. We are open for questions for now. Thanks.
Hi, good afternoon. My name is Manish Kumar. I am the Director of Engineering in an IT and telecom company called Amdocs. My question is primarily to Kamaljeet, Rastogi, or Vivek. You can also answer that. We are talking about digitizing the currency, and cryptocurrency also has a major role here to play. Cryptocurrency is kind of open source of payment remittances. Reliance Jio has said that they are going to invest big way in blockchain technology, which is the backbone of the cryptocurrencies. What do you see cryptocurrencies, how they are going to play a role, because India, as of now, Arun Jaitley has made a statement in the parliament that they are against the cryptocurrencies. And of course, it is a threat because the India's currency is a threat when people start more of using the cryptocurrencies, which is kind of, an anonymous way of transferring money to, different players. And of course, it has a threat for terrorism as well. But the background technology, which is blockchain, is one of the very niche technologies when the digitization of money is concerned. So what do you see cryptocurrencies, what is the future of it in India or across the world?
Sure. No, very good question. No digital currency panel discussion or presentation can go without blockchain, and we missed that point. So thanks for bringing it up. As I was saying, Bitcoin, blockchain is the talk of the town. But it is at a stage where everybody has an opinion, and I can share with you mine. So I'll break it into two. One is blockchain technology as such, and then the cryptocurrency as one of its use cases, right? So blockchain technology, yes, I think it has a lot of power. It is a new technology, you can say, which using the new technical capabilities available now, like of the internet and servers being available and the computational power being available and all that, right? So per se, I believe the technology is very good. It is being used for many other use cases along with cryptocurrency, right? For contracts, for remittance, for trade documents, right? So I am more aware of the banking scenario. So banks are trying to adopt blockchain technology to replace some of their legacy communication models like Swift messaging and all, right? But coming to cryptocurrency, because it has the word currency associated with it, technology may be very good, but I think regulators and the government will find it very difficult to kind of allow it to become significant, right? Because controlling currency, controlling money has been one of the very most important elements of governance, right? And you have RBI, you have banks, you have everybody, and controlling the money flow is very important. So I think regulation will come in and not allow it to replace physical cash or digital money that is running from the banks. But alternate use cases of blockchain are being already adopted. There's a company in Hong Kong which is doing remittance using Bitcoin, for example. Let's say somebody wants to remit from Dubai to India. I'm just taking an example. This company is doing some other corridors. So they take 1,000 dirham in Dubai from the remitter, buy Bitcoins for it, sell the Bitcoin in India for Indian rupees, and pay the beneficiary Indian rupees, right? So this is one example of how cryptocurrency is being used. But for it to replace digital currency, replace wallets and all, I have my doubts on it.
So, just to add to what Mr. Rastogi just said, I came across a very interesting article on blockchain. So when you say cryptocurrency is an outcome, as he rightly said, the blockchain, and in fact distributed ledger technology is the backbone of all of this. And there are various use cases which are being solved using this technology, and those use cases are being named in different formats. So it can be IOTA, it can be Bitcoin, it can be Ripple. Ripple, as he mentioned, solves the purpose of international remittance. IOTA solves a use case of Internet of Things. So if you want to do a transaction which is done to help a use case for Internet of Things, you can transact using IOTA. But the article which I am talking about talks about how is distributor. So it is the simplest article I have came across to understand blockchain or distributed ledger technology. How many of you have heard of Mumbai Dabbawalas? I'm sure everyone here should know that how complex is their delivery system and how they do it beautifully and simplistically. So that article talks about exactly how this distributed technology is almost apple to apple comparable to what Mumbai Dabbawala does during a transaction flow. So the moment a guy collects a box from any house, he puts a code on it, and after every handshake there is a slash and there is a next code to it, and that code are predefined in the ecosystem, and every subsequent guy in the chain knows that what is the previous code mean, and he does not need to know the long tail, but he just need to know the previous code detail. So this is how the code is open to everyone. You can see, I can also see that code, but I cannot tell that, okay, this dabba belongs to that particular guy. But definitely the guys who are in that chain will be able to demystify it, that okay, this code means that. So this is how a blockchain moves. It is so open that it is very less vulnerable to any security attack, and so this openness has brought the interest of everyone in this particular technology, and the kind of handshakes required during a transaction are drastically reduced, because everyone is connected in that network, and anyone in that network can pick any block and transact. So the intermediaries, so as the example of remittance says that we need to have a source bank account here in India and a destination bank account in Dubai, and then the consumer should hold an account in that particular destination bank, then only the transaction can do. But in this, what happens, if I want to send someone in Dubai, he and his laptop and my laptop will directly talk. There is nothing at an institution level we need to route through. So that is an example to say it, but definitely the technology in itself has a great potential. The ways and hows of implementing it and the regulatory framework around it is something government can look at. There is no definitive answer to it. It is still in its nascent stages. But from a potential use case perspective, it should definitely be solving many purposes in the industry, not even outside financial ecosystem. Thanks.
Hello, my name is Navdeep. I am working at Indian Oil. So as you rightly mentioned that the number of digital transactions have now again come back to the level of pre-demonetization. So what do you think, was there any policy bottleneck on government side that let this happen, or there was any other reason so this happened? Because as you mentioned that RBI has put in some regulation time to time regarding that digital wallet and payment banks. So these restrictions must have been there in other countries also for correctly verifying who is doing the transaction for whom. So what do you think that what are the main reasons that the number of digital transactions have again reached back to that pre-demonetization?
Okay, so I would beg your pardon. I guess I have missed communicating it rightly. But I said that number of the currency in market has gone back to the real estate, but not the digital transactions. So if the digital transaction went up from 100 to 450% immediately after demonetization, it is back to close to 200%. So it is almost doubled. So even though cash in circulation in market has gone back to its previous stage, but the digital transaction have boomed to 200%. But it has gone down to the original level of 450%, because there and then people were using it only and only for they were using digital transactions for everything and cash only and only for emergencies and exigencies. So that was the need of the hour, for which made it quadruple and all. But even if we see within a year, so I would talk about the number of POS in the market. So POS is the machines which you swap in for cards and all. So immediately after demonetization, the requirement in market was 10,000 POS terminals every day. Okay, so I will take an example of a bank like ICICI. He has ICICI traditionally deployed 1.25 million POS in the country till in last 7 to 10 years. But within a year, they almost deployed close to 0.75. So they immediately reached a mark of 2 million
within 3 to 4 months. And similar is the impact of overall merchant terminals in the market. The traditional card POS reached to close to 4 million within a year, which was traditionally being evolved to almost 2.5 million since a decade. And there are so many new technologies and companies which have come up with the mobile POS terminals. So wherein your phone, just by an app and a small card reader plugged to it via Bluetooth or so, those are called MPOS terminals, have also come in, and their numbers are also quite growing and all. And there are very good fintech innovations happening. So there are sound-based payments and all which have been introduced lately, and there are companies who have got the patents and all, and they are now trying to convert all mobile phones into a payment device. So these cards, the physical plastic is in itself in the back burner mode, and the mobile itself will gonna talk about your account details and all. So these are the things which will anyway organically grow the number of transactions and the way and change the way and habits people do. It is little to do with government policies and all, because government policies are not always specific to an industry of a fintech or a financial ecosystem. They are governed from various tangents which touch across that policy. So government cannot induce a habit into the consumers, but government can only support with a framework, and definitely leaving remittance for wallets apart, rest of the things are pro digitization, with merchants are being subsidized with their MDRs by the government. So this is a very good initiative for promoting digital transactions.
Thank you.
From personal experience, a lot of you know that merchants who had started accepting wallets and all, suddenly once the cash came in, their POS stopped working, their Paytm stopped working, right? So to answer your question, I think merchants have played a role where they've stopped accepting digital payments, right? So we have no choice but to say that, we have to go to ATM, keep some cash, because some of the merchants may not accept digital payments. So that is one very big reason why it has come down from the peak. It has stabilized to 200%, which is good enough, but not that good that is required. Second thing is taxation, right? I mean, if you have relatives who are into SME or a grocery store or whatever, you ask them, hey, are you taking digital payment? They say, no, we are back to cash because of taxation. So both the things have to be sorted out. So basically, I think the bottleneck is on the merchant side to be happy to accept digital payments. So the cost of accepting digital payments has to come down to zero. There is no subsidy or no discount that will help unless it is brought down to zero. Right, merchant, even 0.01%, we know the merchant mentality. As I said, a lot of us, I may have relatives, that for them to lose even that much margin, they will not accept digital payments. Then on to the consumer side, before I go to consumer, it is the business case is a problem, right? Let's say Paytm, because they are in the valuation game and all that, they did not look at business case, right? They just went for customer onboarding and mass. But if you look at banks and all, they will first ask for a business case. So again, business case has an issue. If you want to make something free, obviously there's no business case to it. You have to go to data analytics or loyalty and try to have a long-term business case. So these are the issues because of which it is not taking off yet. So companies like Paytm or others who will have a valuation business game and can get funding and can encourage, give merchant also something, some points, right? Instead of charging them and delaying their payment, like Paytm had a problem of saying, hey, it will take 2 days to credit your account. Merchants didn't like it. So unless there's a scheme for merchants saying that, okay, you'll also get loyalty points or something, and you'll get it free and you'll get it immediately, then merchant will say, I have no problem, because fine, physical cash has a problem. Tax with GST and all, over time I think it will get solved. So there are these issues because of which it has come down.
I think what I feel is that the payment has to be frictionless. Cash payment is the payment which doesn't have a friction at all. You take out the money, you give it to him, you take the goods and making payments from a wallet also you have to take out a smartphone, then start the app, and then it takes time. Sometimes the network is not there. So all those issues are there, especially in smaller places. Like in Delhi, Gurgaon, Noida, people will make it. Cities, they will make it. But smaller places, you go to Sona, all the people might not be able to make the payments. And so it has to be as simple as paying cash, like you just enter the amount, you touch some device. And another challenge is the infrastructure. Like Aadhaar Pay is there, but Aadhaar infrastructure is not in place. So you can pay without doing this thing, you just by putting a thumb impression. But that infrastructure to reach to smaller places will take time. Of course, the digital money will grow, digitization will grow, but it will take time. That's what my take is.
Good news, judges. Is it the best time to trade in bitcoins, or we have to wait for some government schemes and all?
So, very difficult question, I must say. Hope I am not being recorded because this is a sense Mr. Jaitley will get to my house if I comment on this directly. So I would only say that the right time will be when Mr. Jaitley announces formally to you. But I can only say that there is nothing legal or illegal as a tender. Government can only say that this cannot be a currency to be used. This cannot be an alternate to the currency being used in the country. So you cannot trade in this country using that coin. So this is my take personally, that government can at a worst case, so you can take an example of China, wherein the exchanges were banned and all. So every exchange got the setup done outside the country, and the exchanges are running with the same name, same things, and your coins are basically addresses which you can hold anytime in your wallet. The only thing government can do this thing that, okay, you will not be able to transact. So you cannot purchase goods using this coin within this geography because it is governed by the laws and all. But you can anyway trade it outside with the ecosystem, with this thing. With an exchange registered outside the country, but the difficult part would be to get your cash back. So you have to be careful on that. But definitely trading is something outside the purview of the government.
But I think the cryptocurrencies, the biggest issue is volatility. Basically, if it's a 100 rupees note, or if it's a currency, then it is 100 rupees note. The RBI will give 100 rupees worth of things or whatever it is written. But if it's a Bitcoin, every day the price will change. So how that will be monitored is, I think, the biggest challenge in that. Yeah, so that's why government cannot make it a legal tender, because then if it is 100 rupees, government can say that it is 100 rupees. But cryptocurrencies, who will say that it is? Yes. Yes. Yes.
Thank you.
Hello, my name is Akash Goswami, and I'm from Motilal Oswal Financial Services. So as Mr. Rastogi rightly said, the payments, wallet payments percentage come down to 200% because of the merchants not accepting it and because of the taxation. But my question is how you will be dealing with the psychology of Indians. Like Indians feel safer when they are having a certain amount of money in their wallets and the pockets. And how much time it will take to counter this kind of a psychology. So if we take an example of Kellogg's, so while they entered into the India, it took certain amount of time and certain amount of decade to make Indians comfortable to how to eat with the cornflakes with the hot water or with the hot milk or cold milk. So what amount of time it will take to make comfortable with the wallet payments to Indians, and how you will be dealing with the psychology of that?
I'm an engineer and then an MBA, so I don't have any knowledge about psychology. But yes, to solve the problem, it's an important question to understand the psychology. So my only answer to it is it has to be commercial reason. Like a lot of us, why did we use wallet? A lot of you raise hands, you know. How many used it for cashback? Or loyalty points or discount, right? So, okay, not that many, but I think that is an important reason. Otherwise, like Praveen was mentioning, you know, there's still some friction. Take out your phone, you always want to save the battery for other stuff, and then, you know, owning the application and using it. There is some steps involved. Cash has been easy. But we started using Paytm and all because we said, hey, there was an SMS saying, hey, you will get 10 rupees cash back if you use it for Indraprastha gas bill payment, right? So I said, okay, let me use it for that. So merchants have to be given something similar, right? So I think that's the only answer I can give on solving the psychological problem.
Hello. Is it the awareness? Because if you see the population of India, more than toothbrush, there are a lot of smartphone users are there in India. So is it? I believe it's the awareness that we lack in.
Yeah, see, it has to be on all sides. So government is doing a lot, right? We discussed that. Regulator is doing a lot. They've issued licenses. Though obviously they have been in slightly control. The telecoms are doing a lot, right? They did not have much business case, but they took the payment bank license and they are investing in building it. Banks are trying to do a lot. Consumers like us, we all have wallet applications. We want to use it wherever possible. Merchants are also trying. They took pause and all. I think obviously it's a matter of time also to some extent. And maybe another push from the government. Government has subsidized MDR rates. They are thinking of reducing taxation also, right? So I think maybe one more serious demonetization may be required for us to.
I think what the help the biggest is making people aware about digital money. Because now small places, guys who didn't know there is something called ATM card, they also know how to operate ATM. They also know there is something called swipe machine. Merchants also know that POS is required, either M-POS or anything. So after that, everyone is aware of. Yeah, everyone is aware. So awareness is there. Now it's have to be operationalized, basically. That's what is to be done.
Thank you, speakers, for your valuable inputs. Thank you, audience, for patiently listening to the session. May I now request our chair to kindly hand over a token of appreciation to other speakers, please. Mr. Kamaljeet Rastogi. Mr. Praveen Dhabhai. Mr. Anuj Sharma. Mr. Ankur Malhotra. And may I request Ms. Sonia to kindly hand over to Mr. Vivek Singh.